All right, let's take a look at the gold chart again today. You can see on Friday we got our first real test of the intermediate uptrend line. An intermediate decline should not only break this trend line, it should also close below it. Usually it'll close significantly below it. I pointed out this before that we've gotten into this sideways churn. I was expecting that after the initial crash. Figured we would churn for a while as the bulls defend that 1923. That was the old bull market high from 2011. And the bulls are going to defend this. They're going to defend this breakout. So that was the rationale to expect this churn that we're getting. So first test of this intermediate trend line on Friday. At some point this should break. Now I will say this: it is possible to break that trend line and then the market price rallies and you have to redraw the trend line. So we'll just say that we come down here, make a little bit lower low, and then bounce. And if this bounce were to make a higher high above this high, then you would have to move that trend line. That trend line would have to come down to this pivot. So there is a small chance that the initial trend line there is gets invalidated and we have to redraw it. But I doubt it. We're in the fourth daily cycle. Fourth daily cycles, they can be dangerous. Often the intermediate cycle will top with the fourth daily cycle left translating. We would, if that's not going to be the case, if this recovers and makes a higher high, then we would probably need a fifth daily cycle before we get our intermediate cycle low. And I don't think that's likely. We're already 24 weeks into this intermediate cycle. Normal for gold, a normal intermediate cycle is usually about 22. So we're already starting to get a little bit stretched. Now, I will say this, that this intermediate cycle right here was a little bit short. I think this was 18 weeks. So it's not unusual for a short cycle to be followed by one that's a little bit long. So that's probably the rationale for this cycle. That's, like I said, it's already on 24 weeks. This daily cycle that we're in right now is on I think it's going to be day 18 come Tuesday. They tend to last about 35 to 50 days, although this was a very, pretty long cycle. So we might get a slightly short one here. But the odds probably favor that this fourth daily cycle is going to left translate. Eventually it's going to break this trend line. I think there's a good chance we could bounce again Tuesday, but again, I don't think we're gonna make a higher high above this pivot. I think this daily cycle probably topped on day 4, and I think the odds are pretty slim that we could go back above 20,089 to make a higher high, and then require a fifth daily cycle. So my expectation just remains the same. We're stuck in a difficult sideways churn, but that churn is probably going to resolve downwards, whereas this churn resolved upwards. This churn occurred early in the intermediate cycle. This churn is occurring late in the intermediate cycle. One of my rules is that breakouts that occur late in a cycle tend to fail. We broke out above the 1923 here, that 2011 high. We broke out very late in the intermediate cycle, so I was really not expecting a big sustained move above 1923, and that's exactly what happened. We didn't get a whole lot of follow through to the upside before starting this churn. All right, and one of the other qualifications, not only does price need to break that intermediate trend line, but it should break and turn the 10-week moving average back down. Now, the 10-week moving average is roughly the same thing as the 50-day moving average. So we should expect price to eventually break below this 50-day moving average, and then the 50 days should start to curl and move down. And almost every intermediate decline completes this confirmation before we can get a bottom. And even the very short intermediate cycle low here during the crash in March still dropped far enough below the 50-day moving average to turn it down at least briefly here. And this is back in 2019, that the intermediate cycle low that came before that, you can see not only broke below it, but held below that 50-day for a couple of months before breaking out. I don't think we're going to hold below it that long this time, but I do think that we will complete that confirmation that price will break below it. This will start to will turn down, at least for a little bit, before we get our intermediate cycle low. So those two confirmations, I am hesitant to, well, I don't want to be leveraged. Let's put it that way. You can certainly have an unleveraged old turkey position and not, worry too much about an intermediate cycle low. I mean, every one of these intermediate cycle lows get recovered, eventually, because this is a bull market, and bull markets eventually make higher highs. So even if you got caught in this with an unleveraged fund, it's not the end of the world, because price is going to turn and go back up, and the bull market will continue. Same thing happened here. Same thing's going to happen here. Even if we do get, or when we do get our intermediate decline, break below the 50-day moving average, turn it back down, maybe we come back down and test this consolidation zone as I've been expecting. It's still, it's going to bottom, and then we're going to go back up, and we're going to make higher highs. As I've been saying for years now, I don't really think the bubble or the end of the long-term bull market in gold will be over until we get to probably at least 7,000, maybe even as high as 10,000 in gold. So, as long as you're unleveraged and not in, a heavily leveraged trade, especially like short-term options, then you can certainly just hold on to your unleveraged positions, ride out any intermediate cycle low, and then the bull market will do its thing, and your position will come back, and gold will make higher highs. And many traders have an insurance, call it that, an insurance position in an old turkey. It may not be 100% of their of the cash that they want to have in metals, but they've got a portion that's in that is in insurance, so to speak. So they have an unleveraged position in the metals, and they're willing to ride that position into an intermediate correction, and then hold on to it for the next leg up. Like I said, an intermediate cycle will eventually bottom and then move back up and make higher highs. What we try to do with those insurance positions is convert them. So at intermediate cycle lows, we want to convert the unleveraged position into a leveraged position. So we're going down, your insurance, just in case there isn't an ICL, or in case the bull rally lasts longer, we get a fifth daily cycle still, whatever. You've got your insurance position in your long-term buy and hold positions in metals and miners. And then if we do get an intermediate decline and price comes down here somewhere or whatever, then we try and convert that unleveraged position to a leveraged position, either in some long-term call options or some double or triple leveraged funds, although I don't think there's any triple leveraged funds in gold anymore. But that is the strategy that we employ. We've got our long-term positions, and then during corrections, we just try and switch those out for leverage positions so that going down, we go down slowly, and then on the way back up, we come back up leveraged and we make a lot more money. So by the time we would be back at this level here again, then we're going to have a lot more money in our portfolio than somebody that just rides it down and rides it back up. All right, so for now, like I said, we're still just stuck. We're just bouncing back and forth from oversold to overbought, and neither side is getting control of the market. We're not embedding or getting heavily oversold or overbought in either direction. Just a sign of a market that's stuck going sideways. But I expect that this sideways is probably going to resolve differently than this sideways. This sideways is probably going to resolve to the downside and give us the intermediate cycle low in our next really good buying opportunity.